Itakwa FX here. So guys, today I'll be taking you guys on how you can use simple 50 EMA to frame your trading. You can use 50 EMA to trade US30 effectively. So you have to start from the bigger time frame like daily or H4 to know what the trend is. If the market is above the 50 EMA, you should wait for a grab of liquidity. Everything is on the chart. So guys, please don't forget to subscribe to the channel, turn on the notification bell so that whenever I upload a new video, you learn something from it. Let's get to the chart. Guys, now I'm on my H4 using US30 chart. So get your 50 EMA on your chart. You have to go to indicator. You click on indicator. On the search bar, you type in EMA. We are using exponential moving average. So you type in EMA. Once you type in EMA, there is this moving average that shows up. Moving average exponential. You choose that one, this very one. You choose it. Once you click on it, it will be on your chart. Then you go back to your chart. You close the interface and you go back to your chart. When we see that the 50 EMA now it is on our chart. Now simply tell us that anything we have to do on this chart is to take a buy trade. We are not selling, we are only taking buys trade. So another thing we are going to do is to use H4 to know if the market is above the moving average. Then if market is above the moving average, you are to take a buy trade. How will you take a buy trade? How will you know when to enter the market so that US30 is very volatile, so that you won't get stopped out. So now we see that this market has been on a bullish trend. It has been going up from here. It has been going up. We have structure here. Now this is when you start counting your structure. We have a break of structure here. We have a nice break of structure right there. We have a nice break of structure right there, and the zone that lead to that break of structure was here. It was this one. It was this zone, but the market didn't come back to that zone. All these things you are doing is when you notice that the market is above the 50 EMA and it gives you space, not touching the EMA and going up, touching and going up. No, it has to separate itself. It has to stand on its own above the moving average. Then you know that, oh, the volume, the buying volume here, it's really, really high. So you keep your mind, you sell trade when the opportunity presents itself on the chart. So here you see that the market break structure to the upside at this zone, but it didn't come back to the zone. Again, it created this very leg that kept this zone here. Goes up again, it went up and it creates a high. It creates a high right here. It creates a high right there. It creates a high right there, but let me change this so it can be different. So this high right there, if you are using a trend line, you can use everything to make sure that it gives you the clear picture whenever you are trading. So you see that from this very level, from this very zone which the market created to this high, till this high, it gives this high here. from here, from here from this place back to this high was where the market was trading. But what happened is that the next time the market trying to push up, it breaks structure as it closed above this red line which I drew. So it closed above the other high, which shows you that the market has broken structure to the upside. Then you mark this zone, you marked this very zone which I marked before. You marked that zone, you marked that zone out. This is where you want to take your trade from. So you mark this zone out. Then another thing will come in. You won't blindly take a trade just because of 50 EMA cross above. us30 is very volatile. You have to do anything to make sure that you catch the move. If not, you are going to be liquidated all the time. So another thing comes in. Once the market breaks structure to the upside, there is something you will observe. You don't blindly trade, you trade based on liquidity. Once liquidity is being taken down and then break structure to the upside, this will shows you that it is time for you to get into the market. It's time for you to get into the market. So the market has taken liquidity to the downside and it breaks structure to the upside. That is when you are going to take your trade. How will you know when this happened? That is when another indicator comes in, which is um Asia range. You go to indicator, you search, you type in sections. Once you type in sections, you check, you scroll, you choose sections by Lux Argo. That is sections in bracket by Lux Argo. That is the one you will choose. The reason why I don't type on it is because it's already on my chart. So once you choose sections and you type by Lux Argo, you close the interface. Then you go back to your chart. You notice that the indicator is already there. So another thing you will do after your indicator is on the chart. Note, number one step, you should know the trend. Number two, how do you know the trend? Number one step, know the trend. Number two, how do you know the trend? You know the trend by using 50 EMA. Once 50 EMA, once the market is above the 50 EMA, it shows you that you are only going to be taking a buy trade. So as the market was above the moving average, that shows you that the market is at the up, it's going up. So you know your trend. After that, you mark your structure. Then after that, you wait for liquidity grab to the downside. Then after that, wait for a break of structure. Then you mark the OB, which is the you mark the OB other block that lead to the break of structure to the upside. And this will happen during London section. It will happen during London section. You place your trade, then you are good to go. Even if it happen on New York section, you have two sections to trade when it comes to this. You either trade London section or New York. So once that happen, now you are going to M15 after your criteria is being met. Like I said, one, so you know your trend. One, you know your trend. Two, you check for your structure. Three, wait for liquidity grab. Four, wait for break of structure again. Then five, it's your entry criteria. Five is your entry criteria. Then you are good to go. You take your trade right there. So let's go to M15. Let's see how you can implement all those things before you take a trade using us30. So right here, we are on our 15 minutes chart. This is when you are going to use your Asia section indicator. So right here was the 4-hour zone which we marked. Here was our 4-hour zone which we marked. What we need is for this Asia low to be taken. Once Asia low is taken on this very zone which we marked, once Asia low is being taken, that is because we are going to take a buy trade. So Asia low has to be taken. If we are taking a sell trade, then Asia high has to be taken. So after this Asia low is being taken, the market on your M15 break structure to the upside. You can see this market creates, once the market comes in, it gives us a zone right here. It gives us this, the last down candle before the up move was from here. That was the last down candle. And after that, after this candle was printed, you can see that the market break structure. There was a structure here, this very place here. It breaks that structure to the upside. So the market breaks structure right there to the upside. So what you are waiting for now is for the market to come back to that zone that the structure has been broken. As the market breaks structure from that zone to the upside, you have to wait for this market to come back to the zone which structure has broken for you to take a trade. So you have to scale again. You have to go to a smaller time frame again. That's what I do. So I think you should do the same. You go to a smaller time frame again. It could be 5 minutes or 3 minutes for you to take a trade. So on this zone, this very M15 is where you are going to work in. Is what you are going to use to work on when you go to 5 minutes or 3 minute structure. That's what you are going to work on. So once you have to scale down. Risk to reward is the main thing here. So you have to know what you really want. So you scale it down, you take your trade. So if I go to a smaller time frame, I don't want to go far. I don't want this video to be too long. So that is where you will take your trade. You target the upside. You place your trade right there. You pick your long two, you place your trade right there, and your stop loss will go a bit below the zone like that. Then you TP how many RR that you wish to TP. You know how many RR that you do take, so you TP the RR and you are good to go. Only this one trade can really give you 1 to 10 RR. You risk $1 to make $10 just using these simple trading techniques. So let us go to the sell side. So right here on my H4, we are going to take a sell trade. How do we go about this? One, remember what I told you before. One, it's your train. Two, it's your structure. Three, it's a break of structure again, which is liquidity grab. Four, is your entry criteria. So now looking at this 50 EMA, you can know the structure of the trend of the market we are in, that we are in a sell because the market has closed below the moving average. So since the market has closed below this moving average and it broken structure to the downside, this shows us that the only thing we are going to be doing in this market is for us to take a bearish trade. So we mark this out. This is our 4-hour OB. We marked it out. Then after marking that out, we are going to our M15. like I said, your train, then your structure, then your M15 for your liquidity grab, then your entry criteria, then you take your trade. So now to our M15, let's go. So right here on our M15, this was the zone we marked. That was the zone we marked. We marked this very zone. That was where we marked at our H4. That was where we marked. Then this is time for us to add our Asia range indicator. Then we add it up. The reason why we add this up is for us to know our liquidity graph, which I say liquidity. Then, so here was the zone we marked. Here was the zone we marked on our H4. You can see that the market came into this zone. It came into the zone and it gave us a displacement with a break of structure to the downside. So now that is when you are having an interest on this zone. You started having interest on this zone. As it tap in and give you a displacement to the downside, you are having interest on this very zone. Now that is where you place your trade. Like I said, you move down to a smaller time frame, you place your trade. You don't just place, but if you wish to place your trade on M15, so be it. But for me, I like to move down to a smaller time frame based on my leverage. My leverage is so fucking high, so for that I have to move to a smaller time frame for it to give me a smaller risk. Then that is where I'll place my trade. I'll place my trade like this. I'll place my trade right at this zone. Place my trade right there, my stop loss a bit above the zone, and I tip it below. I tip it below this low, which is, it can easily gives you that same 1 to 10. That is how you trade. You can see the market comes back and clear all the lows here, giving you 1 to 10, meaning you risk $10 here, you make $100 just by trading using 50 EMA, train, liquidity, and your entry criteria. So guys, do me a favor by tapping on the likes button, click on the notification bell, turn on all notifications, so when I drop a new video, you will learn something from it. It really takes me a long time to make sure I put this thing in order. This is not a 1 minute or 5 minute video, so do me a favor to click comment. If you have any questions, that is why you are here. Feel free to ask your questions. I remain Aqua FX as I sign out.